Thank you all, and welcome to the first panel dedicated to China. I have been chairing many panels on China since I first moved to Hong Kong in 1992, but recently the panels I've been asked to chair have titles like End of the Chinese Miracle. There is no question mark at the end of it. You're saying the story and the miracle are still intact. So talk to us about how the competitive landscape is changing and what are the factors that lead you to believe that the story is intact?
Yes, it's a good question. It's a changing world, changing in different ways. The biggest change, I think, is the change in economic, the change in the geopolitical situation, the change of the way the global is, how it's globalized. Give people the biggest challenge is we need to decouple our mind. Previously, it's pretty aligned. We create value, we align the humanity, we align innovation, we get listed, we collaborate. But nowadays, we have to think, yes, this is China, this is US, this is good, this is bad. Actually, there's no good and bad, there's one point. So the biggest challenges for human beings in China, for entrepreneur, for investor, really is about how we strengthen our soul, our mind, for us to adapt the changing world.
So let me ask you more granular questions. Yeah. Before COVID, if you look at all the technologies, most people had the sense that China was narrowing the gap with the US. Now, take biotech. It's not something you invest in.
Yes.
But I think most people would have seen all the advantages China has with, say, big data, anonymized, on 1.4 billion people. The fact that there aren't constraints, say, on stem cell research. The fact that you had so many budgets and scientists coming back from the best universities in the world. And yet China didn't come up with leading edge therapeutics or mRNA vaccines. Do you see the gap with the US narrowing in a world of decoupling or widening? I mean, you are focused on things like AI, on semiconductors. To what extent will they decouple? Will China, having to rely on itself, be able to narrow the gap with what is leading edge in the world today on things like AI and semiconductors? And give us very technical and very granular answers.
Okay. I had a very long trip in the past 2 months. I traveled to New York, Singapore, Bali, Jakarta, and I was just back from the Europe trip to London, Oslo, Germany, Munich, Frankfurt, Lisbon, and here. To tell you the truth, the decoupling happens in the politics. When I talk with the people in all these regions about climate tech, energy innovation, AI, with the entrepreneurs and the investors on this region, people are very excited about the involvement. And we talk about the collaboration. Take AI as an example and energy as an example. When we talk about the EV adoption in Oslo, 90% comes from, 90% are new EVs. For every 9 new cells out of 10 is new EV. And we talk about how the battery involvement, how the previous traditional gasoline station evolved to a hybrid model with EVs and with the petrol ones. So all these are very aligned. We don't see too much decoupling or too much gap happening in all this industry. But when we come to the media, when we talk about the decoupling, we only see it in politics perspective.
So let's talk about some of the technologies. I mean, clearly, one of the, if you go to China, 35% of all the cars in China are now EVs. EVs are the first time, I think, that you see attractive pricing and the highest quality, and that is EVs. But to what extent do you think the world will let China export EVs, which is one area where it has a clear competitive advantage and is the technology leader?
Yes, I think, 25 years ago, I was with McKinsey, and I is on the team and Shanghai Volkswagen. And our task is to help China build up its first car with its first PaaS database. And it's only 25 years later. China has only achieved one thing, to build up a car by its own, and an electrification mechanism, okay? And I think the people who are willing to adopt EVs, not only in China, but also in other regions, just because it's more fancy, it's more cost-wise efficient, and it's more software-based. So it's a global trend instead of a China trend. We see a lot of good examples in Europe, like Volkswagen, Mercedes-Benz, all has their very fancy cars. So I believe it's a universal thing. Secondly, whether China can export the car to certain countries, I think there is decision from the market, from the consumer, also the decision from the governor. Maybe it has a more collaboration situation with my country. For example, in France, it's good to have China cars, but probably not in Germany because there's more competition. But it's, to me, it's a natural, firstly, it's a natural global theme. Secondly, it's a free choice of the market. Yeah.
It's actually very interesting. Tesla, as you all know, has a factory in Shanghai and one in California. And Tesla is constantly sending workers from Shanghai to Fremont, California, because the productivity is so much higher in China. I mean, one of the sectors that you do love is fintech. And we have somebody in Ken who is a fintech pioneer. And for me, it's kind of counterintuitive that China has had such a clear competitive advantage in things like digital payments, because fintech really threatens a lot of the vested interests in China. But on the other hand, it also helps accelerate goals like financial inclusion. Maybe you can start off by saying how you came across Ken and why you decided to invest in him.
Okay.
And then we'll let him talk about the business model.
Yeah, sure.
Sure. I start with this sentence and let Ken share for himself. And fintech definitely is a big thing. The reason we invested in Panda, Remit, Ken, because they really create value. They are creating a mobile-based global remittance service. And the most charming point is purely use online KYC. So the cost is much, much less than the pioneer player now in the market. And it's instantly confirmed in the system, if I present correctly. And so technology really brings value, and it's a global play. And we invested very early, so that's the reason we invested. And
but how did you come across Ken? How did you cross paths?
Oh, that's a...
Yeah, so I think it's interesting. We talked to a lot of VCs in China, right? I think, but at the time, I think I was in Shanghai. I met both Henry and Charles, and instantaneously, I think they felt understanding in what we're doing, because believe it or not, fintech is not a space where a lot of traditional VCs in China would invest in. It's more of a lot of European VCs will invest in fintech companies. I really appreciate in terms of when Henry's team really understand the value that we create and the business model, and where they see us not only as a fintech platform, but also a global company. A little bit about myself, why I started this. I'm a firm believer if the global economy were to grow, globalization must happen in terms of exchange of goods, exchange of information, exchange of resources, and obviously money is one of them, right? When we look at it, China has always been a foreign currency restricted country. In terms of moving money in and out of China has always been difficult.
And there are capital controls to this day in China.
Oh, exactly, right? So a lot of Western companies, even big banks, and have for many years tried to crack through that barrier and was unsuccessful. But we saw a pain point, in terms of people need to move money to their friends or loved ones overseas, or people from overseas need to send money to China, right? But the process was extremely difficult in terms of cost, in terms of efficiency, in terms of just a lot of uncertainty. So we want to create a platform where people will be able to move money instantaneously at a very low cost, do a mobile platform, whether into China or out of China. When we first started, there was a lot of doubts in terms of how can we sort of solve that problem, because one, you have to navigate the compliance network framework, both jurisdictions, right? You have the sending country and also you have China and the receiving country, right? And then also in China, we want a customer to be able to access the funds in all their bank accounts. Like, for example, Western Union has been in China for 30, 40 years. They only have 3 bank partners. And China has over 500 plus banks. We want the customer to have access to all those bank accounts. I think we took that, right? We saw the pain point. Initially we went to over 100 different banks to talk about our proposal to local regulators. And then we were the first one to able to establish a, digital remittance capability in and out of China, have access to all the banks instantaneously at a very, very low cost. Initially, I think what's interesting is majority of our customers were Chinese people, whether they're in China or outside of China, sending money to each other. Then we noticed our customer base continue to grow to individuals that have, not just Chinese, but individuals that have business relationship with Chinese individuals. And then when you look at it, right now we're established in 40 plus countries, and we have a lot of non-Chinese customers. Singapore, we have a lot of Malaysian in Singapore sending back to Malaysia. No, I think coming here, looking at opportunity to start our business in terms of partnership. So for us, we definitely see an opportunity in this area where we could work with different regulators, different technology base to really enhance the value proposition to move funds or assets on a cross-border basis more efficiently and cost efficiently.
I just want to, go into it in a more granular level, because whether you look at a PayPal in the States or credit card companies in the States or UnionPay in China, say, their fees are 100 times higher than yours. Maybe you can talk a little bit about that whole aspect, and how do you convince them to work with you when you're actually destroying their business model, which has historically been so lucrative for them. And, obviously, a lot of people don't realize this, but I was following very closely the whole episode of Ant. And at one point, Ant accounted for 74% of all digital payments in China. And the banks were deadly opposed to Ant and helped sabotage that listing, actually. So how do you convince them to be your partners rather than your competitors?
Yeah, interesting enough, when we first started, we needed a bank partner in China to launch that business. Obviously we went to all the large banks, the ICBCs, the Bank of China. It was a disaster, I'll be honest with you, right? Initially they rejected our proposals. It required we have a lot of innovative ways into this, but we have very high demand in terms of customization from a technology build standpoint. And also we have to work with the banks to find a local regulator to identify these unique approaches, which is difficult. But I think our initial crack, we identify a local smaller bank in China that has, interest in terms of launching more of a global business. By working with them very closely, right, to identify the compliance aspects, the technology aspects, and work with local regulators, we were able to crack through that. Now, once the first bank sort of come on board, we were able to identify multiple banks to come on board. And the same thing with Alipay or Tencent. Initially, I think they see us as a competitor, right? How can they work with us, or they try to launch similar business from a digital remittance business from Hong Kong to China. But then they saw their constraints, where we have a ability to launch on a global basis, on a more focused level, right? So surely now they have become our partners in terms of not only we can send money in and out to banks, but also to the Alipay wallets, WeChat wallets, and other digital wallets in the Southeast Asia, as well as PayPal, right? So I think, in a sense, I think these big players need to see the value we bring them. And I think in the end, to Henry's point, is how much can we save the customer money and really bring together value proposition to the customers and to our partners. In the end, that wins out all, I think, politics and geopolitical tension. I think all those things are secondary once we bring value. And same thing for governments as well. I think once we demonstrate that to the Chinese regulator, that what we're doing is helpful to the economy, they're helpful to the everyday customer, and also ensuring that their regulatory requirements, understanding what their needs are met, is where we really excel at. I think all those things are critically important for us to move forward.
You know, one of the interesting things about, you know, your model and the whole digital payments emergence in China is it's part of a movement away from the traditional pipes of the international financial system. Do you have any point at which you touch, say, SWIFT, and, you know, which is, you know, supposed to be neutral, but in fact, the US uses SWIFT in a very political way? Does your technology totally separate from the historical pipes of the international financial system and cross-border payments?
Yeah, I think one of the key things why we were able to get our cost basis down and to really become very effective is we started building our global payment network ourselves. A lot of time when you're relying on whether the SWIFT network or the third-party intermediaries, the user experience costs are really outside of your control. In Henry's point, like when we first started, obviously we had to use certain aspects of SWIFT, certain aspects of third-party providers. But as we continue to develop over the last 3-4 years, we really sort of double down in our technology, but our global payment networks framework. Now we don't just build in China, but we built a global payment gateway that allow us to collect money, make payouts instantaneously at a very low cost. So I think in certain ways, we always have to rely on what's the network that's available, but we really want to build certain things and connect them ourselves is really the key. I think it sounds simple. It's not like we built like an AI technology that does everything, but really a lot of the hard labor where you're connecting every point individually, do your network and do your own technology, which will really bring the cost down, increase the user value proposition and user experience. And those are the key things that my team and I continue to try to strive to do.
It's so interesting to me because on the one hand, you have, China being the leader on central bank digital currencies, and then you have these digital payments networks, which are so independent of the traditional infrastructure, right? Yeah. But were there fears on the part of regulators that your networks could be used for, say, capital flight to facilitate capital flight or money laundering and all these kinds of paranoid, concerns of regulators?
Yeah, I think the take is you really understand what each individual regulator's key concern points is. To your point, China obviously they want to prevent capital flights. They want to control who's sending money in and out of China, right? They want to know what's going on. But for us we need to understand what the regulator wants and how we can meet those expectations, right? To be honest, when we first built the application, the Chinese regulator was very hesitant about us launching the money for outbound. They say, hey, you can send money in, but don't send money out, right? So the first couple of years, we really, starting building our business, allowing individuals from a global basis to send money to China in a quick, efficient way. As we continue to build, they monitor our progress. They see how we do KYC, how we do AML, how we do transaction monitoring, as well as filing with regulators, right? And not only Chinese regulators, but regulated outside, like the US, Australia, Japan, same. As we continue to grow, they feel confident that we have built a good process And we are diligent in terms of how we are ensuring all these things are being met. So that is why, with last year, they gave us the permission to do outbound business. We're being the only digital payments company to allow to do so. And we have also acquired license in multiple jurisdictions in the US, Australia, Japan, Singapore, EU. So I think in that sense, and all of our business cases are probably reported to them for discussion. So we are very transparent. We tell them what we do. We listen to what, we have conversation with regulators, understanding what's bothering them, what their concerns are, and we demonstrate to them how do we do certain things. For example, it's not just China. When we launch in Japan is a very, interesting country, right? Where in the past, they have no online KYC. We're the first company to allow by Japanese regulators to do online KYC for our customers. And since it has been adopted by other followers, and we were a small company, but for us, we just continue to go to them and demonstrate to them how we do KYC, how online KYC is actually more efficient than a face-to-face type of interaction. I think in that sense, right, we really demonstrate that we can break through a lot of barriers if we just try and really understand what the concerns is by the local regulatory bodies and work with them.
I'm going to cut you off here because we're running out of time.
I'm sorry.
And I need to turn to Jacky. Logistics is one of the most interesting areas of China. And, China has always been higher, more emphasis on infrastructure than on consumption. But you're one of the people who are supporting household consumption. And logistics area is another area of clear competitive advantage and leadership in China.
Thank you, Henry. I just recall my memory. What is the first time I visited Dubai? It's 20 years before. It's in 2003, end of 2003. Yeah. So at that time, the commodity we are transport from China is quite different from today. So like Henry just mentioned, China have a best strong supply chain system. So 20 years before, we bring all these small commodity made in China, made in EU. Even in Dubai, we have a Dragon Mart. But Dragon Mart is still here. But the commodity today we bring here is quite different. We already upgrade our commodity to solar panel, to EV car, to leisure battery. So it means China manufacturer now produce different products. Also, China's supply chain is not only based in China. We bring our ability of supply chain globally. This is a big change. So as an international logistics company, we are not just bringing the cargo in and out of China. We are also bringing the cargo global to global. So after pandemic, China reopened from this February. I already visited more than 30 countries. So we visited Latin America, Mexico, Brazil. We visited Turkey. We visited Poland. We visited Morocco. We visited Egypt. So for sure, we visited many countries in the Middle East and countries in the Southeast Asia. Why we visited so many countries? Because we are together with our customer. They are the big manufacturer in a different industry of China, but they are also become the local producer who running and operate the plant in the different countries. So the way we are deliver the cargo comparing with before is quite different. One of the significant changes, not just product update, also the cross-border e-commerce booming. China's supply chain can support globally e-commerce. A lot of e-commerce platforms like Shein, like Alibaba, like TikTok, they set up in a different country and ask the Chinese seller to supply the cargo and make the logistics delivery in the last mile. So this is a big change. So we are so excited and so confident even face a very big challenge. China supply chain and the Chinese manufacturers still have very big confidence to be global. And as an international logistics company, together with this kind of manufacturer, we also become more and more globalization. Thank you, Henny.
You know, our time is almost up, but I wanted to focus on two entrepreneurs because I think it's so exciting to see the entrepreneurs of China today. So we didn't have any time really to talk about the larger investment landscape in China, but I just wanted to bring out several points that Herry made on why this is a good time for private markets in China. One thing being the valuations are so attractive now. We haven't talked at all about the renminbi, but as a funding currency, it's incredibly attractive. You can get really good financing now. And as Herry pointed out, there are exits, even though NASDAQ and sales to US strategic may not be as prevalent as they once were. Our time is up. Thank you so much.
Can I add just a sentence after all? That is, you know, our human beings' life has always been very, very connected to the nature. The calendar in China is looking at the moon. It's a moon-based calendar, just similar like here. And China's medicine, pharmaceutical, is using the hand to touch the hand to feeling the pulse. So a lot of Chinese people, including entrepreneurs, is really creating something highly correlated to our life and not creating something not in the world. So asking the question whether these products or services or platform can be used by the world people, the answer is definitely yes, because all these services and products is the benefiting for making our life better, cost is lower, and be more connected. So that's the purpose. I'm the investor, I'm connecting the technology. They are the entrepreneur. Jacky is connecting all the ships in China, not only China, globally. And the Ken is closing all the capital. So that's our purpose. Thank you.